Mr. Arun Kumar Singh, Chairman and Managing Director of BPCL, joins us now. Let's take our conversation forward. Mr. Singh, good morning. Thank you for joining us. Let me first start with a very basic question, Mr. Singh. Given what is happening to the oil market, oil prices are up more than 35-40% in just 3 months. What is your understanding of the dynamics of the oil market? How much of the uptick is geopolitical in nature? How much of the uptick is normalization of demand?
Okay, so responding to your question that what component is how much in this today's price, very difficult to pinpoint exactly the numbers, but there are 4 things rolled into one. Of course, now is a temporary phase. What is going on is volatility is on account of geopolitical reasons. You know it better. And that is one big component that is playing now. Second component is also rolled into for last 3 months is demand coming back to normal level. But demand growth per se is not great, but definitely pre-pandemic level we are about to reach. Of course, India diesel story is yet little short, but by and large, pre-pandemic story is we are very close to. So demand coming back. Third reason is refining margins. World over cracks have gone up because of that. And that reason is primarily attributed to China and Europe because China is holding back its conventional teapot refining to a large extent. But that is a wild card to my mind. That is something that can come back any moment but right now that is limited. And fourth reason, of course, for us, which is applicable is the exchange rates, because that is also plays some part in the whole thing. So in nutshell, to answer your question, geopolitical plus in demand coming back, plus refining margins are at record high, at least in recent times, particularly the cracks. And fourth, of course, this partly winter is also playing some role, but in some geography, but is not as big a component. But yes, it is also playing some role in this.
What happens for a company like BPCL when you are staring at a change in dynamism? Let's say 6 months ago, we were discussing that what would be the future of E&P companies because oil in a sense was losing its relevance in terms of an preferred fuel. Suddenly, everyone is of the view that, okay, oil prices will remain strong, the demand has normalized, no large infrastructure investments have gone into oil exploration and oil prices will remain firm. So how would you deal with this evolving dynamic situation? You know, sir, 10 years ago, the formula was simple. The more you invest, the more you will discover and the more money you will make.
So that question, since the time we are in this business, we know that is a game of supply and demand primarily. And therefore, whenever there is a demand, supply will rise up too. And if there is a constraint in supply, price goes up. Exactly that situation we are in, but it is a seesaw game. It is not something that is going to remain here permanent. It is something that will change. I'll tell you something which is, maybe we are not able to predict over 3 months period or 6 months period, but certainly over a medium term of more than a year or so, we can see 1 million barrels still a day coming from US that is yet to come back. 1.5 million barrel a day still Iran is holding. And we personally believe that at least 2 million barrel is held up by OPEC. So 4 million barrels. So supply side is not a problem. Something manufactured and something will take time. Particularly, I can see now if Iran comes back and US at least 1 million barrel comes and the winter goes away, this price should roll back. But you are right that E&P investment in last 2-3 years has been below par. And this question that how fast energy transition will happen is something that world has to grapple with. It has to be orderly transition. Right now, it looks like a very chaotic and disorderly transition. Europe certainly will lead the way for the energy transition, but how fast is EC and how slow? And all these issues are manifesting in the geopolitical issue also. It is a very system thinking issue where the systems are coming into play instead of one linear reason.
Mr. Singh, is it as tricky to predict where the Singapore GRMs as well are headed? Because after hitting $8 to a barrel, they're back at $6 around?
No, I'll hold my gun because we are not in the business of astrology. But it largely depends on refining margin. If demand is at same level, say for a stable environment, to my mind, what China does is more important. How long China will wait and leave this money on table, that is $1 million question. So that only Chinese can answer. So if they have around 2-3 million barrel a day refining capacity lying there. Of course, it is inefficient, but at this margin, this crack, most inefficient refineries will also be profitable. So only concern will be environment, and how much China is willing to go that path of environment. That is a question that one has to grapple with. Similarly, Europe has also pulled back around 1 million barrel a day refining by converting their refineries and all that. Now with this margin and all that, how long they'll be able to resist the temptation of not coming back is something that these two economies have to holds an answer. To refining side, unfortunately, we have some say, Indian companies, because now we have roughly 250 million ton. We are surplus and we are also influencing world market. But China has a much bigger capacity in their basket, and right now they are restricting exports. Largely restricting exports. Right now, they are more concerned about their environment and all that. Particularly, those old refineries are not that efficient.
So, Mr. Singh, looking forward, do you predict a scenario where perhaps ESG compliance, environment consciousness, green fuels perhaps could cannibalize fossil fuels at any juncture?
The future is yes, future, but how and when part is holding the world to ransom. What part is always clear that way forward is energy transition. There is no doubt about it. But keeping pace with making noise ahead of too much noise ahead of time is also one of the reasons for this mess that we are currently seeing, because ESG part and also green part and all that is moving, but it is not moving the way orderliness is required to make this transition. So this is an unintended consequence of making too much noise without too much action.
So as the when from move towards green energy holds everyone in ransom, so the point also is that green energy is far more expensive. The opportunity cost for ESG is also more expensive. There is an inflationary impact.
That's exactly the reason. What I'm trying to say that for a country like us, we need to accelerate our internal story much more than what we have. But at the same time, we had to be in the balance with the globe, because all said and done, we are not a rich country and we can't afford this $100 plus environment. If it is, so we do more, and we do more in a sustained manner, and so that world moves in the direction of green energy, but not at the cost of ruining the economy. So that is something that we have to strike a perfect balance between the two, and that's what we all in oil industry should think, do, act, and sleep all the time with, because this is something that we should worry, because this price definitely as a country we can't afford, because that will take its toll on all sides of the economy. So naturally, this we have to have, as you probably said, that some piece are still in technology space, some piece is in an economic space, because we have to have economy of scale to manufacture a big piece. Some part is in regulation space, some part is in collaboration space. So all these 3-4 components have to come to make this energy transition happen. And therefore, in the transition period, we have to figure out a way how to strike a perfect dynamic balance. Because if it is too much of chaotic thing, I think we have too big a problem on hand.
This, of course, has been flagged off from several quarters. But the bigger question is, and what our viewers will also want to know, now with India's soft power, hard power only going up, is it making a case, and do you believe there is a case for countries to dilute the green laws?
Dilute the?
Green laws, the current laws that we have,
Okay.
the what is being thought out as, which is making the ESG opportunity cost much higher.
ESG difference so far is not playing out as big in our country, at least so far. But I'm sure in times to come, it will start showing up in a big way. But one thing is, of course, sure that we should move very strongly in the direction of green. And because we don't have, 85% of our, we don't have that kind of, storage of, resources within our country. So we are highly dependent on others for our energy we need. So we need to, what we are doing is a perfect thing to do, that we are increasing our, footprint in solar in a big way and all that. And therefore, naturally, what we are doing is, you must have noticed that a few days back, we have opened Chennai, Trichy, Madurai corridor, giving comfort that we have enough station now for EV charging. And this corridor we declared as the EV corridor. So BPC. So gradually what we should do, we should accelerate all this, but at the same time, for at least 5 years window and all that, with investment in oil and gas to continue, and basically for investment in upstream more than anything else, because upstream is something that we believe that there is a window of 10 years requirement for upstream story to subsist. After that, of course, what happens is what we have to see, that whether Europe moves in a direction that it has set out for. Europe is 10 to 15 million barrel a day. Europe holds the card. So, and Europe is moving very fast in green direction, all of you know. And if world energy falls by, Europe demand falls up by, say, in 10 years by, say, 5 to 7 million barrel a day, world is home. So that question also will stare, that who has invested, who has not invested, where. So low investment, I was trying to say that low, particularly those investments which have, say, a lower million, dollar per unit of production investment, that should go on. That should go on a big way in the way that at least it holds us for 5-10 years till world transits into big from 2030 onwards. That is our belief now, that we should not do. It's a perfect walk. It is a tightrope walk. It is, nobody knows the answer, but as and when this story comes, I think 5 to 10 years we have to hold. This side also we have to remain strong.
It's been great having you on the show today to help us understand what exactly is going on. Just overnight, such price action that we saw in the crude markets, right? Brent topping $99 a barrel and then retreating. So saying thank you so much for putting all of it in context, especially the way India is moving towards becoming more green.